Good afternoon, everyone, from the IBD Newsroom. Welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to take a look at another sell-off for the stock market. We're going to take a look at weak action in Apple and Best Buy, and also look at a breakout from NeoGenomics that held up pretty well today. Hi, everyone. Ken Shreve, joined by Ed Carson. Ed, we had a pretty ugly day for the stock market on Wednesday. Today, more selling because Trump had a bit of news he wanted to share with the market.
Yeah, I mean, Trump decided early afternoon, East Coast time, that he was going to impose tariffs, a 10% tariff on the remaining $300 billion worth of Chinese goods, and that'll include the Apple iPhone and a lot of consumer goods for the first time, because up until this point, it's been more raw materials or other things that consumers don't see directly. It was worse than yesterday because we were up strongly today. It was up, a lot of these indexes are up 1%. So you see if you can spot when Trump said he was going to impose tariffs. It's pretty easy. This is an intraday chart, the Nasdaq 5-minute chart. So it was pretty nice move along. Dow was up over 1%. I think the Nasdaq was well over 1%. Big losses after that.
Well, the Nasdaq's intraday gain got up to 1.7%, I think. So it ended, all three major stock indexes ended with losses of around 0.8% to 0.1% today. So more ugly action for the stock market. We'll start by taking a look at shares of Apple. Sort of a disappointing session yesterday. They reported earnings. Stock gave back a good chunk of a big intraday gain. Was trading near that buy point, but the stock did reverse lower today on this China news.
I mean, that's Apple's exposed because it's going to get tariffs. The Trump tariffs are going to hit Apple for the first time. It's possible that China, that people in China might say, well, hey, the U.S. is imposing tariffs on us. I'm not going to buy U.S. brands like Apple or Nike. And, to be honest, if you look long term, if you look since September 2012, Apple has largely moved in line with the market. So when the market goes down, obviously most stocks move with the market day to day. But if you have a stock that's basically bobbing along with the market, well, you're not going to get a lot of outperformance.
Yeah, and it was, like I said, it was a solid breakout attempt for Apple yesterday, but the stock did give back a lot of those gains, and the stock reversed lower again today. A lot of the FANG stocks, for that matter, Amazon and others, looking a bit vulnerable here. All right, moving on, we're going to take a look at shares of Best Buy. At last check, this stock was down a lot more than Apple, down 10%, 11%, something like that. It was a stock that had been trading near a buy point, but Best Buy under a lot of pressure today.
Yeah, Best Buy was in a buy zone, and it just really sold off hard. Again, consumer electronics, consumer goods, retailers were hammered because they're really going to get hit for the first time by these Trump tariffs. So you saw heavy losses, Nordstrom, Abercrombie & Fitch. Best Buy was one of the best performing ones up until this point, but boy, just a brutal sell-off in that stock. So, something to be watching for. Coming into Christmas, a 10% hike on a lot of these consumer electronics, that is really going to be hard for Best Buy to deal with.
Yeah, so there was early in the day when the Nasdaq was up sharply, software stocks, semiconductor stocks leading the charge. We did have one breakout, actually, today's stock of the day, a company called NeoGenomics, ticker NEW. We just wanted to give a shout out to this name for really a solid day and a good breakout.
The ticker is actually NEO, Neo like the Matrix, and this one had a nice move. It was a couple days ago. They had earnings, didn't move a whole lot then, but the stock broke out powerfully past a flat base. Nice move, and this is cancer testing firms have done well. There's Guardant Health, Exact Sciences is buying Genomic Health. So cancer testing companies, a lot of them with new testing, ideas, those are really doing well. Domestic firms are doing relatively well. So software, totally different base on that held up relatively well, whereas chips were hit really hard today. But that one was doing really well today.
All right, well, it looks like we're going to get our second distribution day for the Nasdaq and the S&P 500 after one yesterday. So we are in a market right now that has been showing signs of institutional selling. So that'll do it for today's show. We do have a couple of housekeeping items. Our podcast just dropped, our latest podcast with Arusha Paris from MarketSmith. That is available. Investing with IBD, latest episode available at investors.com. patreon.com/podcast. And a reminder, don't forget to join us on all of our social media outlets. You can sign up for free on Facebook, Instagram, YouTube, and Twitter. All right, folks, we'll hope for a better day for the stock market on Friday. We have the jobs report. Everybody will be watching that at 8:30 a.m. Eastern Time. Until then, we'll see you tomorrow.